Today, we take a closer look at the Philippine stock market to understand where we are and where we're headed, given how Trump's tariffs are shaping investor sentiment. Our guest today is Edmund Lee, President and CEO of Caylum Trading Institute, who offers insights on investing in 2025. Hi, Edmund.
Hi, Dee. How are you?
I'm good. Okay, good to have you with us. Lots to digest. First off, Edmund, how would you assess the current state of the stock market, given today's economic landscape and the impact of Trump's tariffs on foreign direct investments?
Actually coming into the year, we were slightly more positive about what was happening because we felt that many of the things, especially from the tariff end, were already priced in. Fast forward, going into January 2025, actually we've seen the largest inflow that happened in emerging market. In fact, that amount was around $5 billion. The problem was largely everything went to China, right? So what happened was that everybody else in the emerging market did not benefit from that increase in inflow. But nonetheless, I think many things from the administration, especially from the Trump administration, is more or less priced in by the markets today. I think what is happening today is that a lot of people are overestimating that, maybe it's a time for emerging market to start rising because then you're seeing valuations as is. That has yet to be seen, and I think that's what we're all waiting for. In fact, I think there's a lot more things being played out by emerging market, largely because export-oriented countries today are being affected, especially coming from China. In fact, we've seen 100 factories in Thailand shut down last year. Indonesia, large export, also affected. Lucky for the Philippines, we're a net import-oriented country, but nonetheless, what's really been surviving the Philippine equity market today has been the OFW remittances, and part of it has been we've been also benefiting from the virtual assistance, more than 1 million coming from Philippines.
Mm-hmm. And it's worth mentioning that the sell-off we're seeing, it's not just us. We're not an outlier here. It's all across the world in emerging markets as well.
In fact, you'd probably say that the Philippines is better off than everybody else. That really doesn't make it a good thing, but I know we're down 5-6% for the year in terms of the PSEI, but look at everybody else in our neighbors.
Yeah.
Everyone in a worse situation than us.
Correct. We're down 5 to 6% for the year. But if you look at the bigger picture, the PSC index first touched 6,000 in 2013. 12 years later, we are at 6075. What are the key barriers, both domestically and globally, that are holding us back from attracting more foreign fund flows?
I always say everything's about timing. In fact, you could make the case that URC, for example, 12, 13 years ago was also at the same price level that we're seeing today. There were 60 pesos when I was first an analyst 12, 13 years ago. Today, they're still at 60 pesos. But if you look at profitability, this company has probably grown 4 or 5 billion pesos 12 years ago to 12 billion as of last year. Yes, there are challenges, and I think this is the time when we're seeing it. But again, valuations today, 9 times PE, 4. I've never seen anything like this. I'd like to think we're in a better situation than where we were before. Biggest difference is, it's the bond market that has to go down first, meaning you should expect bond yields to go down first more than the equity market. And once that starts to stabilize and go down, I think the equity market should be in a better position.
Yeah, going back into the equity market and to better our positions before investing, every investor needs to understand the company's business model, cash flow, and whether its capital expenditure budget can actually sustain growth. But beyond the fundamentals, scalability is also a huge X factor. In today's market, which companies check all of these boxes?
Just before I get to the company, I just like to talk about cash flow because I think a lot of people forget that in business today, and especially picking stocks, cash flow, yield are actually much more important than they were 10 years ago when interest rates were sitting at 0. And so for us, and that's the reason why we like DNL so much, because we feel that they already spent their capex already for their Batangas plant. They spent 8-9 billion for that entire plant in Batangas. Now they're trying to wrap up operations. In fact, they just released fourth quarter earnings, I think maybe 20-30 minutes ago. In fact, if you look at their Batangas plant in fourth quarter last year, it's actually already positive at 240 million pesos. Yes, gross margins across the board were a little bit tempered and still weak. But we think 2025, and especially coming from management, it's probably in a better situation than everything else. We think that they are positioned not just to benefit from the recovery in the consumer story in the Philippines, but even also from an export-oriented end. And actually, looking at how they've been performing from the outside, I think the export sales says it all. They've still been growing at 37% in the whole year of 2024.
Yeah, okay, so that's a buy on DNL. On to other corporate developments, Edmund. There is ABS-CBN and Ayala Land. ABS-CBN is restructuring its assets by selling a large portion of its Quezon City property for 6.2 billion to partially repay bank loans and to consolidate core operations. How do you view this strategy in terms of them improving their financial stability?
Oh, definitely. I think that's a good thing for the entire ABS-CBN group, right? At least you cut down your debt. At least they got a decent price per square meter on the Quezon City property. Again, biggest challenge for them is still from the core operation business, whether they're going to be able to turn that around.
All right. Okay, that's all the time we have for today. Thank you so much, Edmund, for sharing your insights on the market and more with us.
All right, Mikey. Have a good day.
You too.